अनम्यूट करना है, रिकॉर्डिंग शुरू कर देना।
Namaskar and good evening. I am CA Dr. G.S. Grewal, and today's session will be taken by me, and along with me is Mr. Harvinder Singh, a very senior teacher, accounts teacher, having a very, very vast experience. And in the end, we are going to take up your queries together. And this is fourth part of our 5 series webinar. And the next webinar will be on the 16th, wherein we will discuss all general things or your queries. We will take that up and answer. 16 तारीख को जो वेबिनार होगा उसमें हम डिस्कस करेंगे जो भी आपके क्वेश्चंस होंगे उसको, और उसके अलावा सीबीएसई ने ओएमआर शीट के ऊपर एक सर्कुलर जारी किया है, उसको भी डिस्कस करेंगे। आपको एग्जामिनेशन में क्या क्या आपको प्रिकॉशन लेनी है, व्हाट आर द डूज एंड डोंट्स, and what are the repercussions if you darken the circle wrongly or you do not fill in the box. So we will all discuss this on the 16th same time, and we will share the link with you. तो आज का वेबिनार शुरू करते हैं। अनुविंदर सिंह जी, आप कुछ कहना चाहेंगे?
Good evening, children, and first of all, I would like to wish all of you a very happy Children's Day. God bless you all, and may God bless you in these exams, and you may get success.
So happy Children's Day to you all, and let us now start our academic session. Right? So in this, we are going to discuss about financial statements and accounting ratios. Financial statements, we will discuss the broad terms. I will explain it to you. If you have any queries, you can put it on the chat box, and all those queries will be taken up. We have already received few queries, which we will take up at the end of the session. जो queries हमारे पास already आ गई हैं, उसको हम session के end में इसको discuss करेंगे. So financial statements क्या हैं? What are the financial statements prepared by a company? They are statement of profit and loss. वो कुछ नहीं है बल्कि प्रॉफिट एंड लॉस अकाउंट जो हम पार्टनरशिप फर्म में बनाते हैं वो ही है। बैलेंस शीट, ये 2 फाइनेंशियल स्टेटमेंट्स हैं जो हम डिस्कस करेंगे। एक तीसरी जो है कैश फ्लो स्टेटमेंट, वो एक एनालिसिस का पार्ट है, उसको हम, क्योंकि वो टर्म 2 में है, इसको हम बाद में डिस्कस करेंगे। So let us start with the financial statements, important terms. So first term, what is shareholders funds? Shareholder funds क्या हैं और इसमें क्या क्या चीजें include होती हैं? Shareholder funds, first item in this is share capital, paid up share capital, and it includes both equity share capital and preference share capital. Along with that, reserves and surplus. Reserves and surplus क्या है? वो भी shareholders का ही पैसा है। कुछ reserves and surplus में ऐसी entries हैं जो specific हैं, जो distribute नहीं हो सकती, like securities premium reserve, capital reserve. ये distribute नहीं हो सकते. They can be used only for that specific purpose. Surplus, that is balance and statement of profit and loss, ये distribute हो सकता है, पर broadly देखें तो ये shareholders का ही fund है. It belongs to the shareholders. And third item in this is money received against share warrants. आमतौर पर हमारे पास ये क्वेश्चन आता है, कल भी हम एक वेबिनार कर रहे थे, उसमें ये क्वेश्चन उठा कि money received against share warrants क्या है? What is money received against share warrants? So we must understand what are share warrants. Share warrants is a financial instrument which a company has issued to be converted into shares at a predetermined price on a predetermined date. तो उसका प्राइस भी डिटरमिन्ड है, डेट ऑफ कन्वर्ट जब वो शेयर कैपिटल में कन्वर्ट होगी वो भी डिसाइडेड है, क्योंकि ये अल्टीमेटली कन्वर्ट हो जाएगा इनटू शेयर कैपिटल, तो ये शेयर होल्डर्स फंड्स का पार्ट है। ध्यान रखिए, इन अकाउंटिंग रेशियोज मनी रिसीव्ड अगेंस्ट शेयर वारंट्स विल नॉट बी इवैल्यूएटेड, मतलब कोई भी क्वेश्चन ऐसा नहीं होगा जिसमें मनी रिसीव्ड अगेंस्ट शेयर वारंट्स आपसे पूछा जाए अकाउंटिंग रेशियोज में, पर इसकी प्लेसमेंट पूछी जा सकती है। दैट मींस एमसीक्यू आ सकता है। फॉर एग्जांपल एमसीक्यू में आ जाए कि मनी रिसीव्ड अगेंस्ट शेयर वारंट्स इज पार्ट ऑफ शेयर होल्डर फंड्स, पार्ट ऑफ बोरोड कैपिटल और बोरोड फंड्स, पार्ट ऑफ करंट लायबिलिटीज, नन ऑफ द अबव। तो क्वेश्चन बन गया, तो वो शेयर होल्डर्स का फंड्स का पार्ट है। ओके, सेकेंड आइटम, शेयर एप्लीकेशन मनी पेंडिंग अलॉटमेंट। अगेन दिस विल नॉट बी एग्जामिन्ड, मतलब कोई क्वेश्चन नहीं आएगा इसको लेके, और इसकी प्लेसमेंट जैसे मैंने कहा मनी रिसीव्ड अगेंस्ट शेयर वारंट्स पूछा जा सकता है, व्हाट वेयर विल इट बी शोन। सिमिलरली शेयर एप्लीकेशन मनी पेंडिंग अलॉटमेंट कैन आल्सो बी आस्क्ड, इसके ऊपर भी एमसीक्यू बन सकता है। इज इट शेयर एप्लीकेशन मनी रिसीव्ड अगेंस्ट शेयर वारंट्स? ऑप्शन, इज इट अ पार्ट ऑफ शेयर होल्डर्स फंड्स? Is it part of the long-term borrowing? Is it short-term borrowing? Or it is a line item to be shown in the balance sheet? तो इसमें से कौन सा ऑप्शन, ऐसे किसी भी टर्म को लेके एक एमसीक्यू बन जाता है। So dear students, keep in mind that theory is equally important as the numericals are. So third item, non-current liabilities. What are non-current liabilities? We must know that total liabilities are divided into two broad categories. Two broad categories, non-current liabilities and current liabilities. Current liabilities क्या हैं? Liabilities that are not current liabilities are non-current liabilities. ये definition जो है Schedule 3 में दी हुई है. All those liabilities which are not current liabilities are not non-current liabilities. जैसे कि डिबेंचर्स, अगर डिबेंचर्स का टेन्योर नहीं दिया हुआ, मतलब टेन्योर से हम ये असेस करेंगे ना कि ये करंट लायबिलिटी है या नॉन करंट लायबिलिटी, अगर कुछ नहीं दिया हुआ इट इज टू बी टेकन एज नॉन करंट लायबिलिटीज, दैट मींस लॉन्ग टर्म बोरोइंग। देन करंट लायबिलिटीज, व्हाट आर दे? If any of these four conditions are fulfilled, then a liability is a current liability. Number one, it is expected to be settled in company's normal operating cycle. Operating cycle आ गया, एक नई टर्म आ गई। तो what is operating cycle? It is a time period from acquiring the asset, processing it, and ultimately converting it into cash and cash equivalent. ये एक ऑपरेटिंग साइकिल है। अगर इस ऑपरेटिंग साइकिल के अंदर वो फॉल करता है तो वो करंट लायबिलिटी। नंबर टू, ड्यू टू बी सेटल्ड विद इन 12 months फ्रॉम द डेट ऑफ बैलेंस शीट। बैलेंस शीट डेट के 12 महीने के अंदर अंदर अगर उसकी पेमेंट करनी है तब वो करंट लायबिलिटी है। Held primarily for the purpose of trading or being traded. ट्रेडिंग के लिए है वो लायबिलिटी। सेल परचेज, जैसे अब आप सोचेंगे कि लायबिलिटी को कैसे ट्रेड किया जा सकता है, लायबिलिटी को भी ट्रेड किया जा सकता है। जैसे हम शेयर्स वगैरह को ट्रेड करते हैं तो लायबिलिटीज भी ट्रेड होती हैं। सो कोई भी लायबिलिटी विच इज हेल्ड प्राइमरली फॉर द पर्पस ऑफ बीइंग ट्रेडेड इज अ करंट लायबिलिटी। और लास्टली, there is no unconditional right to defer the settlement for at least 12 months from the date of balance sheet. तो तो 4 कंडीशंस में से डियर स्टूडेंट्स एक भी कंडीशन फुलफिल हो जाए तो वो करंट लायबिलिटी बन जाती है। क्वेश्चन ये भी हो सकता है कि आपको दिया हो कि कंपनी का ऑपरेटिंग साइकिल है 24 मंथ्स, तो उस केस में कोई भी लायबिलिटी जो बैलेंस शीट डेट के 24 मंथ्स के बाद के विद इन फॉल कर रही है वो आपकी करंट लायबिलिटी मानी जाएगी। उस समय हम 12 मंथ्स का पीरियड भूल जाएंगे। और अगर कोई पीरियड नहीं दिया हुआ, ऑपरेटिंग साइकिल का पीरियड नहीं दिया हुआ, तब हम लेके ये अज्यूम करके चलेंगे कि 12 महीने की इसकी अगर है ड्यू डेट तब ये करंट लायबिलिटी है। सो इफ द डेट इज नॉट गिवन वी presume that any liability falling within 12 months from the date of balance sheet is a current liability. ये current liability, non-current liability, current assets, non-current assets, ये अंडरस्टैंड करना बहुत इंपॉर्टेंट है। तो अभी हमने देख लिया करंट लायबिलिटी एंड नॉन करंट लायबिलिटी। तो बात आई ऑपरेटिंग साइकिल की। ऑपरेटिंग साइकिल वैसे अभी डिस्कस किया है, बट इट इज द टाइम बिटवीन द एक्विजिशन ऑफ एसेट्स फॉर प्रोसेसिंग and realization into cash and cash equivalents। यानी कि मैंने रॉ मटेरियल बाय किया, उसके बाद उसको प्रोसेस करने के बाद फिनिश प्रोडक्ट बनी, फिनिश प्रोडक्ट बनने के बाद वो मार्केट में बेची गई, मार्केट में बेचने के बाद उससे पैसा रियलाइज किया। तो ये सारा पीरियड जो है, दिस एंटायर पीरियड इज आवर ऑपरेटिंग साइकिल। तो इसके अंदर अंदर जो भी लायबिलिटी आएगी ऑपरेटिंग साइकिल में वो करंट लायबिलिटी होगी। नॉन करंट एसेट्स जैसा डिफाइन किया नॉन करंट लायबिलिटीज को, नॉन करंट एसेट्स को भी वैसे डिफाइन किया। शेड्यूल 3 ऑफ द कंपनीज एक्ट 2013 has defined non-current assets as those assets which are not current assets। बहुत सिंपल डेफिनेशन कि जो एसेट करंट एसेट नहीं है वो नॉन करंट एसेट है। लायबिलिटी, नॉन करंट लायबिलिटी में यही डेफिनेशन थी कि जो लायबिलिटी करंट लायबिलिटी नहीं है वो हमारी नॉन करंट लायबिलिटी। तो अंडरस्टैंडिंग करंट लायबिलिटी बिकम्स इंपॉर्टेंट। लाइक in the case of current liabilities, current assets, it also has 4 conditions. If any condition is fulfilled, it becomes a current liability। current assets है, current asset में भी 4 कंडीशंस हैं। एक भी कंडीशन फुलफिल हो जाती है तो वो करंट एसेट कैटेगरी में आएगी, और अगर नहीं एक भी कंडीशन फुलफिल नहीं होती it becomes a non-current asset। What are the conditions? The asset is expected to be realized in or intended for sale or consumption in the company's normal operating cycle। यहाँ भी operating cycle आ गया, और meaning is same as we have discussed in the case of liabilities। So operating cycle is important, dear students. If in a question operating cycle is given, then you have to take it that any asset or any liability falling within that period is the current asset or current liability। Second condition, held primarily for the purpose of being traded। सेल पर सेल के लिए मैंने कोई भी गुड्स खरीदे, किस पर्पज से खरीदे? टू सेल एट द फर्स्ट पॉसिबल अपॉर्चुनिटी एंड अर्न प्रॉफिट। तो किस लिए मैं होल्ड कर रहा हूं? फॉर ट्रेडिंग। सो एनी asset held for the purpose of being traded is your current asset। 3, our current assets are expected to be realized within 12 months from the balance sheet date। current liabilities में आपने देखा payable within 12 months of the balance sheet date। तो यहाँ पर assets में receivable within the period of 12 months from the balance sheet date। और अगर मेरा ऑपरेटिंग साइकिल पीरियड इज मोर देन 12 मंथ्स, से 18 मंथ्स फॉर एग्जांपल, तो 18 मंथ्स के अंदर जितनी भी एसेट्स रियलाइजेबल होंगी वो करंट एसेट्स होंगी। रियलाइजेबल कौन सी होंगी? डेटर्स। mainly debtors owned. And lastly, fourth condition, cash and cash equivalent, unless they are restricted from being used, exchanged or used to settle for at least 12 months after the balance sheet date. So cash and cash equivalent are always current assets unless or until they are restricted from being used. आप भी सोचेंगे कि ये कैसे भाई कैश एंड कैश इक्विवेलेंट में रिस्ट्रिक्शन कहाँ से आ गई? कंपनी ने फिक्स डिपॉजिट कराया और उस फिक्स डिपॉजिट को उन्होंने एज सिक्योरिटी दे दिया कहीं. वो जहां सिक्योरिटी दिया वो सिक्योरिटी है से 30 मंथ्स. तो 30 मंथ्स तो फर्म कंपनी उसको नहीं यूज कर सकती बिकॉज इट इज गिवन एज अ सिक्योरिटी. सो देयर इज अ रिस्ट्रिक्शन ऑन इट्स यूज. So if there is a restriction beyond 12 months, then it is not a current asset. तो वो आपकी नॉन करंट एसेट में दिखाई जाएगी. तो बड़ी इंपॉर्टेंट चीजें क्वेश्चंस, क्योंकि एक किसी भी सेंटेंस से क्वेश्चन बन सकता है. सो यू हैव टू बी वेरी वेरी केयरफुल. यू हैव टू अंडरस्टैंड what are the concepts and how to determine whether it is current liability or non-current liability, current asset or non-current asset. Operating cycle क्या है? What is the operating cycle? अगर हम आ जाए स्टेटमेंट ऑफ प्रॉफिट एंड लॉस में, तो revenue from operations. And revenue from operations is, what is revenue from operations? It is the revenue earned by the company from its operating activities. That is, the activities carried on by the company to earn profit. कोई भी कंपनी है, it is set up to earn profit. And to earn profit, whatever activities it does, it is any amount coming from there is revenue from operations. And जैसे सेल है, कंपनी के सेल करी गुड्स की, तो वो revenue from operations है कंपनी की. And whenever goods are sold, revenue from operation is always net sales. That means gross sales minus sales return. That is revenue from operations. Or other income, any income earned by the company which is from an activity which is not an operating activity of the company. That is other income. So revenue from operations is important to understand, not only in the ratios chapter, also for the chapters in comparative and common size statements, which is in term 2. But you must know what is revenue from operations and what is other income. अब ये हमने डिस्कस किया. इससे रिलेटेड कुछ क्वेश्चन देखते हैं. तो आप चैट बॉक्स में इसका आंसर डाल सकते हैं. It will come to us. Balance sheet provides information about financial position of an enterprise over a period of time, during a period of time, for a period of time, at a point of time. इसमें से कौन सा ऑप्शन करेक्ट है? Yes. So I will answer. Balance sheet is a static financial statement. It is always prepared at a particular date. That is why it is written balance sheet as at. Whereas for statement of profit and loss,
Soni Kashish has given answer D. Soni Kashish.
Soni
Kashish.
has given the answer as D answer, and Soni, are absolutely correct. So revenue from statement of profit and loss is not, it is for the year. It is very clear from the title itself. Statement of profit and loss for the year ended, whereas balance sheet is as at. So this is a question from CBSE. So D is the correct answer, as Soni has answered. Very good.
Moksh Babbar.
Moksh Babbar has also answered. Everybody should try. It doesn't matter. whether it is correct or not correct. What is important that in the examination, your answer should be correct. Financial performance of an accounting entity for an accounting period is given by cash flow statement, statement of profit and loss, balance sheet, both statement of profit and loss and balance sheet. So which is the correct option?
Salil Bakaria, B.
B. Only one of the student has answered B.
और भी और कई हैं.
Acha, very good.
Many.
So yes, B is the correct answer. Because financial performance is what is the profit? What is the sales? That is revenue from operations. What are the expenses? The net is your revenue from operations plus other income minus operating expenses and non-operating expenses is your net profit. Also in indirect expenses. So let's take another question. Money received against share warrants is shown as other long-term liabilities, shareholders' funds, long-term liabilities, and other current liabilities.
B.
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 B. Who has answered this?
Many students.
Oh, very nice. Many of students. Yes, we had just now, about 5 minutes ago, we had discussed about it. What is money received against share warrants? So correct answer is shareholders' funds. Another question. Share application money that is refundable to the applicants is shown as other current liabilities, other long-term liabilities, and short-term borrowings. Which is the correct option?
A.
A.
Aditya Raj.
Aditya has answered as A. Yes, that is the correct.
And many students have given answer.
So nice. Many students have given this answer. So that's nice. A is the correct option. Don't forget to join in on 16th, wherein all important OMR sheet will be discussed at length, which will help you in answering your, putting your answers correctly in the OMR sheet. Right? Mining rights are tangible fixed assets, intangible fixed assets, intangible assets under development, or capital work in progress. Yes.
The given answer B. किसने C दिया?
C किसने दे दिया? But B is the correct answer. Because you see, it is very easy to determine here. If we go to the question, it is mining rights are. And if C you have chosen, it is intangible assets under development. So it is not under development. So the words used itself gives the answer that we all know mining rights are intangible, but they're not under development. Its mine is where the raw material is extracted, say coal. So B is the correct option. Let's take another question. ABC Limited is developing a computer software for in-house use. It will be shown in the balance sheet as tangible fixed asset, intangible fixed assets, intangible assets under development, or capital work in progress. Yes.
C.
C.
एक ने A दिया, एक ने B दिया.
C is the correct answer. I will tell you why. If we read the question, ABC is developing. That means अभी वो पूरा develop नहीं हुआ. ABC is developing. So that means वो under development है. Or software, it is an intangible asset because it does not have any physical existence. It cannot be seen or touched. That is why it is intangible. क्योंकि अभी develop हो रहा है, तो इसलिए it is intangible assets under development. एक assertion reason based question भी देखें. Surplus, that is balance in statement of profit and loss. It has debit balance. It has debit balance and is shown in the balance sheet as other current assets. ये तो assertion हो गई. And reason is, as per Schedule 3, whether surplus, that is balance in statement of profit and loss, has credit or debit balance, it is shown under reserves and surplus. So remember, dear students, whenever assertion reason based questions are there, you must read the assertion very, very carefully. At that very point of time, you determine whether the assertion is correct or it is not correct. So if you determine it is not correct, so D option becomes one of the choices. Then if it is not correct, you don't have to concentrate on the others, except where the statement is, assertion is not correct or wrong or incorrect. In this case, assertion is not correct. But the reason is correct, because Schedule 3 prescribes that whether there is a debit balance in surplus or a credit balance, it will be shown in the reserves and surplus. In reserves and surplus, all the reserves comes and surplus also comes. So surplus, if it has a debit balance, it will be deducted. Debit balance होगा तो वो deduct कर दिया जाएगा उसमें से. बाकी reserves को total करेंगे और debit balance of surplus वो हम deduct कर देंगे. Balance amount आएगा वो it will be shown in the balance sheet. Another question. Borrowing that are payable after 12 months or after the period of operating cycle from the balance sheet date are long-term borrowings. So assertion को ध्यान से पढ़ेंगे. Borrowings that are payable after 12 months or after the period of operating cycle. याद है शुरू में हमने डिस्कस किया था, if operating cycle is more than 12 months, we have to consider that period to determine whether the liability or an asset is current or non-current. यहाँ पर statement क्या है? Borrowing that are payable after 12 months or after the period of operating cycle from the balance sheet date are long-term borrowings. After, अगर ये होता within 12 months, तो ये statement assertion incorrect हो जाता. Now the assertion is correct. और reason क्या दिया? Liabilities that are payable within 12 months or the period of operating cycle from the date of balance sheet are current liabilities. ये भी बिल्कुल ठीक है. आंसर आ गया आदित्य का. ये तो अभी ऑप्शन तो दिए नहीं आदित्य. बच्चे, this brings me to a very important point. आप assertion reason based questions में भी हर क्वेश्चन के साथ जितने भी ऑप्शन हैं उनको वर्ड बाय वर्ड पढ़ेंगे. Why? Because CBSE has used 5 types of statements, 5 kind of statements, but in a question there are going to be only 4. तो आपको कैसे पता लगेगा कि अभी आपने बिना देखे ही ये आंसर कर दिया, right? And sequence can also change. Aditya, you have given me a very good opportunity. आपने ये अपॉर्चुनिटी दी सबको बताने के लिए कि आपने सबसे पहले क्वेश्चन पेपर में जो क्वेश्चन है उसको वर्ड बाय वर्ड पढ़ना है. असर्शन रीजन बेस्ड में 5 ऑप्शन सीबीएसई ने यूज करी, पर आएंगी 4, क्योंकि मल्टीपल चॉइस क्वेश्चंस में 4 ऑप्शंस इज अ स्टैंडर्ड. अब कौन सी यूज करते हैं उस क्वेश्चन में, ओनली द एग्जामिनर नोज. और दूसरी बात, उसका सीक्वेंस भी चेंज हो सकता है. ये जरूरी नहीं है कि सीक्वेंस सभी असर्शन रीजन बेस्ड में जो 4 ऑप्शन होंगे वो सेम होगा. नो, it can be different. So Aditya must read the question carefully and with a very high concentration.
Aditya has replied that, okay, sir, I will take care.
Thank you, Aditya. Good. No, you see, this is how, even you see, if you without reading the question paper, do you think you can answer the question? No. तो अगर गलत हो जाए तो बेटा आप ही को नुकसान होगा. तो सबको पढ़ना है सारे क्वेश्चन को. और अब हम इसकी बात करें, असर्शन भी ठीक है और रीजन भी ठीक है. Now we have to decide whether reason is the correct explanation of the assertion or not. Yes, now your answer is coming. Now is the time to answer to come. So answer is A, because assertion is also correct and reason is also correct. But reason is not the correct explanation of the assertion. Now यहाँ पर final point आ गया. In assertion we are talking about long non-current, and in reason we are talking about current. So it is, oh yes, I'm so sorry, B is the correct answer, because non-current liabilities are determined on the basis of criteria given under current liabilities. तो करंट लायबिलिटीज का क्राइटेरिया के बेसिस के ऊपर नॉन करंट लायबिलिटीज डिटरमिन होती हैं. इसलिए रीजन इज करेक्ट एक्सप्लेनेशन ऑफ द असर्शन. अब चलते हैं अकाउंटिंग रेशियोज के ऊपर. इट इज अ लॉन्ग चैप्टर, नंबर ऑफ फॉर्मूला, नंबर ऑफ रेशियोज.
सर एक बार और एक्सप्लेन कर दो
किसको?
प्रीवियस क्वेश्चन.
ओके.
संचित has requested. संचित has requested. संचित राज गुप्ता.
संचित गुप्ता है सेड कि इसको एक बार फिर से एक्सप्लेन कर दें इस क्वेश्चन को. असर्शन को देखें सबसे पहले. असर्शन, borrowing that are payable after 12 months or after the period of operating cycle from the balance sheet date are long term liabilities. ये हमने पहले भी अभी थोड़ी देर पहले डिस्कस किया था. What are non-current liabilities? Non-current liabilities are those liabilities which are not current liabilities. अब reason देखें. So this one of the criteria in to determine whether it is current liability or not. One of the criteria is that if the liability is payable within 12 months or within the period of operating cycle from the date of balance sheet, it is a current liability. तो रीजन करेक्ट हो गया. तो इसको assertion का ये करेक्ट एक्सप्लेनेशन हो गई. राइट.
So one question asked by Madhusudan Saxena. Why share option outstanding reserve come under reserves and surplus?
A good question.
Madhusudan Saxena.
पहले इससे पहले मैं एक्सप्लेन करूं, ये आपसे मैं जरूर बता दूं सब स्टूडेंट्स को कि ये इवैल्यूएट नहीं होगा. That means in none of the questions, this question, any question will relate to share outstanding. Easy पूरा नाम?
Madhusudan Saxena.
नहीं, share outstanding.
Share option outstanding.
Or share option outstanding account. So the question will not be there asking any question on share option outstanding account, but yes, its placement can be asked. Now, question is why it is shown under reserves. Share option outstanding relates to share options, ESOPs given by the company to its employees. Only the theoretical part is there in the syllabus. If we look at the syllabus published on 31st of March, but even in the rationalized syllabus, it is not there. But still I will explain. So when an employee becomes entitled for the ESOPs, the company start setting aside amount of out of the profit to meet that loss. ESOPs are always issued at a discount. So if the market value of the ESOP is 100 rupees and it is given to an employee at the rate of 70 rupees, So 30 rupees is the loss which the company will bear. So during this period, when the employee can exercise the option, this 30 rupees will be divided in that period, and company will set aside that amount to this account. Although the term or name of the account is share option outstanding account, but if in reality it is the amount, it is the account which shows the reserve, because when the shares have been issued, only then this amount will be used. And as on date, company doesn't know whether it will be used or not used. Because if the employee decides not to use it, then that amount becomes a free reserve. All right? So let us come to accounting ratios. What is accounting ratio? It is an arithmetical expression of relationship between two independent but related items of financial statements. Two independent but related. उनका आपस में कोई ना कोई relation होना चाहिए. For example, profit before interest, tax and dividend and capital employed are related to each other, but they are independent in the financial statements. But then that is why return on investment ratio is calculated. But on the other hand, there is no relationship between interest paid and revenue from operation. Interest paid has relation with borrowing. So accounting ratio is arithmetical expression of relationship between two independent but related items of financial statements. इसको कैसे express करते हैं? There are four ways. One is as pure ratio, like 2 or 2:1. As a percentage, say 10% or 20%. As a number, 1 time, 2 time, 3 time, 4 times. And as fraction, say 0.75, 0.70, 0.60. तो ये हर रेशो में इन चारों में से कोई ना कोई जो एक्सप्रेशन है वो यूज होगा. So what is ratio analysis? हम बात तो कर ली, what is accounting ratio? How is it expressed? But what is ratio analysis? It is a study of relationship among various financial factors in the business, but they have to be related. If they are not related, then the ratio we can work out, say interest to revenue from operations. We can determine, but what purpose it will serve? No purpose will be served. So there has to be some relationship. So ratio analysis, one of the tools or techniques of analyzing the financial data. Other is your cash flow statement, comparative financial statements, common size financial statements. They are also analytical tools or techniques, but in our syllabus for term 1, it is only accounting ratios. So we'll restrict our discussions to accounting ratios. What are the types? One is liquidity ratio. In this will come current ratio and liquid ratio. Insolvency ratios, that's another type of accounting ratio. Debt to equity. आपके mostly questions अभी तक जो बोर्ड में आए हैं, they have been related to current ratio, liquid ratio, or which is also called quick ratio, debt to equity ratio, and rarely on using the other ratios. So on these three ratios, again, I expect that questions will be largely based on these. So total assets to debt ratio is another, solvency ratio, proprietary ratio, interest coverage ratio. We will discuss all these ratios one by one and the formulas also. Then activity or turnover ratios, inventory turnover ratio, trade receivables turnover ratio, trade payables turnover ratio, and working capital turnover ratio. And last variety is profitability ratios. Gross profit ratio, operating profit ratio, net profit ratio, and return on investment ratio. So let us see what is current ratio. Formula बड़ा simple है, current assets upon current liabilities. कैसे express होगा? In pure ratio, 1:1, 2:1, or even say 2. That also means 2:1. That current assets are 2 times the current liabilities. When calculated, it is calculated as on a particular date. So against the profitability ratios, which uses the data for the entire revenue from operations for the whole year. And what are current assets? This is very important. Certain assets are not included. Current assets, when you're working out current ratio, it will not include loose tools, stores and spares, and also provision for doubtful debts made out of the debtors. If a balance sheet is given, on the asset side, you will find debtors, less revenue from, less provision for doubtful debts. So that amount has to be excluded. That means we have to take net debtors. Why? Why do we exclude it? Because you must know the reason why. The reason is that current ratio is worked out to determine whether the enterprise will be able to meet its short-term financial commitments in time or not. क्या जो enterprise है वो अपनी short-term financial commitments को समय पर meet कर पाएगी या नहीं कर पाएगी. Loose tools या stores and spares कंपनी बेचने के लिए नहीं रखती. करंट एसेट्स का फायदा तो तभी है जब वो कन्वर्ट हो इनटू कैश एंड कैश इक्विवेलेंट, और जब कंपनी ने बेचना ही नहीं तो कैश एंड कैश इक्विवेलेंट वो नहीं बनता. इसलिए वो करंट एसेट्स के एक्सक्लूड किया जाता है. सिमिलरली प्रोविजन फॉर डाउटफुल डेट्स, जब कंपनी खुद ही कह रही है कि ये अमाउंट रिसीव करना डाउटफुल है, जब डाउटफुल है तो करंट एसेट्स में इंक्लूड नहीं होना चाहिए. सो दैट इज द रीजन दे आर एक्सक्लूडेड. याद रखना इस चीज को करंट रेशियो का वर्कआउट करते समय. वी आर गोइंग टू हैव सम इलस्ट्रेशंस आल्सो. और करंट लायबिलिटीज क्या है? करंट लायबिलिटीज एंड शॉर्ट टर्म प्रोविजंस. जितनी भी करंट लायबिलिटी होंगी वो ली जाएंगी इस रेशियो को वर्कआउट करते हुए. ऑब्जेक्टिव हमने अभी डिस्कस किया, वेदर द कंपनी विल बी एबल टू मीट इट्स शॉर्ट टर्म फाइनेंशियल कमिटमेंट्स ऑब्लिगेशंस इन टाइम और नॉट. और बड़ा इंपॉर्टेंट साथ के साथ ही रिलेटेड है वर्किंग कैपिटल, बिकॉज आपको डिफरेंट डाटा दे दिया जाता है और कह दिया जाता है जी इसमें से करंट लायबिलिटी वर्कआउट करो या करंट एसेट्स वर्कआउट करो. सो वर्किंग कैपिटल इज करंट एसेट्स माइनस करंट लायबिलिटीज. ये ध्यान रखिएगा, ये क्वेश्चंस के अंदर बहुत यूज होता है. अगर हम देखें लिक्विड रेशो और क्विक रेशो, इसको ऐसे टेस्ट रेशो ही कहते हैं. करंट लायबिलिटी तो वही है, बट क्विक एसेट्स आ गया इन प्लेस ऑफ करंट एसेट्स. क्विक एसेट्स क्या है? जो बड़ी ही जल्दी से वी कैन कन्वर्ट इट इनटू कैश और कैश इक्विवेलेंट्स. लाइक करंट रेशो, इट इज आल्सो एक्सप्रेस्ड इन as a pure ratio, 1:1 or 2:1 or even say 2. That means quick assets are twice the current liabilities. और ये भी particular date पे ही calculate होता. So quick assets क्या है? All current assets except loose tools. सॉरी ये प्रिंट टाइपिंग एरर हो गया. करंट एसेट्स नहीं, क्विक एसेट्स. ऑल करंट एसेट्स एक्सेप्ट लूज टूल्स, स्टोर्स एंड स्पेयर्स, इन्वेंट्रीज, क्योंकि इन्वेंट्रीज विल टेक टाइम टू गेट कन्वर्टेड. मैं आज बेचूंगा, बेचने के बाद मैं अगर क्रेडिट पे बेचा तो रियलाइजेशन पीरियड भी आ जाएगा, उसके बाद आएगा पैसा। सो उसमें टाइम लगेगा, इट इज नॉट अ क्विक एसेट। प्रीपेड एक्सपेंसेस, प्रीपेड एक्सपेंसेस क्या है? जो फ्यूचर पीरियड के एक्सपेंसेस हमने आज ही पे कर दिए, तो वो तो वापस आना ही नहीं है, रियलाइज होना ही नहीं है, सो दे आर ऑल्सो डिडक्टेड। सिमिलरली प्रोविजन फॉर डाउटफुल डेट्स, दैट मीन्स डेटर्स जो हैं वो नेट अमाउंट पर लिए जाएंगे। करंट लायबिलिटीज की वही डेफिनेशन है, करंट लायबिलिटीज एंड शॉर्ट टर्म प्रोविजंस।
There is one question from Sanchit Raj Gupta. Provision for doubtful debts, other current liabilities में आएगा?
ऐसा है, your question Sanchit is related to presentation in the balance sheet. बैलेंस शीट में आप डेटर्स, दैट मीन्स ग्रॉस ट्रेड रिसीवेबल्स ग्रॉस आ जाएंगे, वहां पर तो अलग अलग आएगा। ट्रेड रिसीवेबल्स टर्म क्या है? क्योंकि प्रोविजन अगेंस्ट डेटर्स है ना, तो ट्रेड रिसीवेबल्स के दो कंपोनेंट हैं, डेटर्स एंड बिल्स रिसीवेबल। तो प्रोविजन जो होगी वो डेटर्स पर होगी। तो आपका जो क्वेश्चन है वो है रिलेटेड टू प्रेजेंटेशन। बैलेंस शीट के अंदर एसेट्स में डेटर्स लेस प्रोविजन फॉर डाउटफुल डेट्स दिखाया जाएगा। आप जो कह रहे हैं अदर करंट लायबिलिटीज में नहीं दिखाया जाएगा। अगर हम सोचते भी हैं कि वैसे दिखाएं ऑन द लायबिलिटी साइड, देन इट इज शॉर्ट टर्म प्रोविजन, जैसा कि टर्म ही कह रही है, प्रोविजन फॉर डाउटफुल डेट्स। प्रोविजन, इट इज नॉट अ लायबिलिटी। सो शॉर्ट टर्म प्रोविजन में दिखा सकते हैं इन दी लायबिलिटी साइड, बट डोंट डू दैट। अगर वो नेक्स्ट टर्म आपका न्यूमेरिकल होगा कंप्लीट, वी मस्ट फॉलो व्हाट इज द पास्ट प्रैक्टिस। पास्ट प्रैक्टिस इज टू शो डेटर्स लेस प्रोविजन फॉर डाउटफुल डेट। और क्विक रेशो का फॉर्मूला क्या है? ऑब्जेक्टिव क्या है? whether the company will be able to meet its very short term commitments in time or not. Current ratio का है short term financial obligations in time or not, और quick का है whether very short term financial obligations can be met in time or not. That is the reason inventories are not included in quick assets, whereas in current assets they are. तो एक illustration लेते हैं। आपके सामने कुछ इंफॉर्मेशन है और क्वेश्चन सेज प्रिपेयर द कैलकुलेट द करंट रेशो एंड क्विक रेशो। करंट रेशो में सबसे पहले हमने करंट एसेट वर्कआउट करनी है। करंट एसेट्स क्या है? ट्रेड रिसीवेबल्स, प्रीपेड एक्सपेंसेस, कैश एंड कैश इक्विवेलेंट, करंट इन्वेस्टमेंट्स। कंप्यूटर्स मेरा करंट एसेट नहीं है, सो आई विल नॉट इंक्लूड दैट। और अगर मैं आऊं राइट साइड वाले में, तो वहां इन्वेंट्रीज है 80,000 रुपीज, तो दैट इज माय करंट एसेट। सो करंट एसेट बिकम्स 6 lakhs, 4 lakhs plus 20,000 plus 60,000 plus 40,000 plus 80,000। तो 6 lakhs की मैंने यहां से कंप्यूट कर लिया, इज माय करंट एसेट। Current liabilities, all that is payable within 12 months or within the period of operating cycle from the date of balance sheet are my current liabilities. Bills payable हैं, yes, इसके साथ साथ sundry creditors, combined they are termed as trade payables. Trade receivables are debtors plus bills receivable. Trade payables are bills payable plus sundry creditors. ये दोनों ही मेरे करंट लायबिलिटीज हैं। डिबेंचर्स आर नॉट माय करंट लायबिलिटीज बिकॉज इट इज अ लॉन्ग टर्म बोरिंग। एक्सपेंस इन्वेंट्रीज हमारी एसेट है, और एक्सपेंसेस पेबल, दिस इज अगेन माय करंट लायबिलिटी।
There is one question from Swati Kohli. Why is computer not a current asset?
But a computer is not a current asset because it is used in the business to say for handling the transactions, and that means recording the transactions or doing the analysis. It is used in the company's work. अगर फर्म कंपनी इसका बिजनेस कर रही हो तब ये इन्वेंट्रीज में इंक्लूड हो जाएगा, पर अगर ये सेपरेट आइटम दिए बेटा तो ये हमारी फिक्स एसेट हो गई, क्योंकि हम इसको बिजनेस रन करने के लिए यूज कर रहे हैं और टू एनहांस आवर अर्निंग कैपेसिटी. तो जितना अगर हम मैनुअली करें तो थ्रू कंप्यूटर करें तो कंप्यूटर से जल्दी होगा. सो दैट मीन सेविंग ऑफ टाइम. Saving of time can be used in business. So it is my fixed asset, not a current asset. So current liabilities work out हो गई 3 lakhs पर. 60,000 plus 1,60,000 and plus 80,000 expenses payable. So my ratio is 2:1. Current ratio is current assets upon current liabilities. इसी क्वेश्चन को हम यूज करते हैं टू डिटरमिन क्विक रेशो. तो पहले तो क्विक एसेट्स में देखें कौन कौन सा आएगा. प्रीपेड एक्सपेंसेस हमने पहले डिस्कस किया, नहीं आएगा. कंप्यूटर इज माय फिक्स एसेट, वो नहीं आएगा. इन्वेंट्रीज को हमने एक्सक्लूड किया था बिकॉज इट टेक्स लॉट ऑफ टाइम टू गेट कन्वर्टेड. तो बैलेंस एसेट्स जो हैं करंट एसेट्स वो मेरी क्विक एसेट्स हो गई, विच इज ट्रेड रिसीवेबल्स ऑफ 4 lakhs, कैश एंड कैश इक्विवेलेंट 60,000 and current investments 40,000. So my quick assets are 5 lakhs. And current liabilities हमने पहले ही देखा था. Debentures हमारी current liabilities नहीं है, long term liabilities है because it is a long term borrowing. So हमारी current liabilities same जो पिछले क्वेश्चन में थी 3 lakh rupees. तो रेशो क्या है? Quick assets upon current liabilities. So 5 lakhs upon 3 lakhs. Answer is 1.66:1. थोड़ा मल्टीपल चॉइस क्वेश्चन ले लेते हैं इसके ऊपर, क्योंकि करंट रेशोज, क्विक रेशो और आपकी डेट टू इक्विटी रेशो, मेजॉरिटी क्वेश्चन इन द पास्ट दे हैव कम फ्रॉम दीज रेशोज. Now, collection from debtors improves the current ratio, decreases the current ratio, has no effect on the current ratio, and none of the above. Who will answer?
Purvi has given answer C.
Purvi.
Okay.
Lot of people are giving C.
Majority of the students are given option C. It has no effect, and they are absolutely right. Why? Because debtors are already included in the current asset. So if amount is received, one current asset is it takes the form of another current asset. Debtor becomes cash or bank balance. So it will not have no effect. A transaction that decreases both current ratio and quick ratio is sale of fixed assets against cash, sale of stock at a loss, payment of non-current liability, issue of bonus shares. Who will answer? In such questions, dear students, we must understand the impact of the transaction, whether it will increase my numerator, which is current asset or quick assets, or it will reduce it, or it will have similar impact on current liabilities. So in this case, it's always better to assume, say, current ratio is 2:1. So 2 lakhs are my current assets, 1 lakh is my current liability. So determine whether any of these transactions, how it will impact my current ratio. So any answer?
Most of the students have given answer C.
C, payment of non-current liability, and that is correct. Because it will decrease my cash but it will not have any impact on my current liability because it is a non-current liability. And similarly, quick ratio, cash is a quick asset, so it reduces, but current liability remains same. As a result, quick ratio will decrease. Current ratio is 2.5:1, and current liabilities are 4 lakh rupees. Working capital will be 6 lakhs, 7,50,000, 8 lakhs, or 14 lakhs. Time is running out, beta. I will have to quicken up because by 6:30, I must finish this because that is how we will be able to take your queries. So in this case, the correct answer is 6 lakhs.
Most of the students are given correct answer.
Okay, no, very nice. Harvinder ji is telling me that he is watching your replies on the chat box, and he said most of the students are given the correct answer. Right. Another question. Now, use of working capital. Working capital is 1,80,000. Total outside liabilities are 3,90,000. Total outside liabilities are 3,90,000. Long-term debts are 3 lakhs and inventories are 90,000. Quick ratio will be 2:1, 1:2, 1:3, or 3:1. So I'll give you an answer. It will be 2:1. And why? Current liabilities are 90,000. 3,90,000 total outside liabilities minus 3 lakhs, which is long-term debts. Current assets are working capital plus current liabilities. You remember working capital is equal to current assets minus current liabilities. If you interchange, current assets is working capital plus current liabilities. So 1,80,000 plus 90,000, 2,70,000 is my current assets. But inventories are not included in quick assets. So that will be deducted out of 2,70,000. So quick assets are 1,80,000. So quick ratio is 1,80,000 divided by 90,000. So 2:1 is the quick ratio. So coming to the next ratio, it is solvency ratio, debt equity ratio. Debt equity, debt means long-term debt. So debt upon equity, that is shareholders' funds. You will be recollecting that in the beginning we had discussed what are the components of shareholders' funds. Equity is another name of it. So share capital plus reserves and surplus. Share money received against share warrants will not be evaluated. So such item will not come when it is about determination of accounting ratio. It is similarly, it is expressed in pure ratio, say 1:1, 2:1, or even 2. Again, it is calculated as on a particular date. And debt means long-term debt plus long-term provisions. Both are debt. There is a difference between provision and liability. Provision is an estimate and liability is determined amount. So, but long-term provisions are part of the debts because ultimately it will have to be paid. Maybe amount will differ. Equity is, we have discussed shareholders' funds, that is share capital, including preference and equity both, plus reserves and surplus. I have particularly not used money received against share warrants because as per CBSE, this item will not be evaluated. Objective is to assess the long-term financial position.
There is one question from Madhusudan. Apart from debentures, what will come under long-term debt?
Public deposits. But such questions, Madhu, they have never been asked. Whenever questions have come on debt, they have specifically taken it as debentures. But suppose there is a term used public deposit, that is also long-term debt.
Bank loan also.
Bank loan. Bank loan can also be long-term. It can be like if a company has borrowed money from bank, which is to be paid after 10 years. So it is a long-term borrowing. So all these are examples of long-term debts. So let us take an illustration. I think I've uploaded the wrong PPT. This was corrected. From the following information, calculate debt to equity ratio. So what is debt in this? Debt is 10% debentures because no other information is given. And long-term provisions, 1 lakh. So total debts are 6 lakhs. And equity is 2 lakhs plus surplus, that is balance in statement of profit and loss, 1 lakh, and general reserve, 2 lakhs. It comes to 5 lakhs. So debt equity ratio is 1:2 is 1.2 is to 1, debt upon equity shareholders. But remember, if surplus, that is balance in statement of profit and loss, has a debit balance, then we will deduct it because it is a negative balance. So that means shareholder funds have reduced. Say in this case, in that case, my equity will be 2 lakhs plus 2 lakhs minus 1 lakh. So 3 lakhs. In that case, my debt equity ratio will be 2:1. I change it in the next slide. This is where the surplus has a debit balance of 1 lakh. So my debt remains same and equity changes. Equity is shareholders' funds, and shareholder funds will be 2 lakh minus 1 lakh plus 2 lakhs. That comes to 3 lakhs. So debt equity ratio will become 2:1. So here you have to distinguish whether the surplus, that is balance in statement of profit and loss, has a debit balance or a credit balance. If it has a debit balance, deduct it from the shareholders' funds. If it has a credit balance, then it of course will be added up. Multiple choice question. Debt to equity ratio is 2:1 if fixed assets are purchased for 10 lakhs against issue of 8% debentures. That is debentures issued for consideration other than cash. The transaction will increase the ratio, decrease the ratio, neither increase nor decrease the ratio, none of the above. Now, because of the issue of debentures of 10 lakhs, that means my debt will increase from, if I presume my debt to be 5 lakhs and equity to be 2.5 lakhs. So my debt will increase by 10 lakhs. It becomes 15 lakhs, but it has no impact on equity or shareholders' funds.
Most of the students are given answer A.
A, increase the ratio. Yes, it will, because debts have increased, but equity, that is shareholders' funds, has remained same. It has not changed. So we've taken the example which I discussed just now. Another question, if debt equity ratio is 2:1, if bonus shares of 2,50,000 are issued, the transaction will increase the ratio, decrease the ratio, or neither increase nor decrease the ratio, none of the above. Hanji. Any answers?
Many are giving answer B and one has given C.
B is not the correct answer because bonus shares are given out of the reserves. So reserves are already part of the equity or shareholders' funds. Only thing is that that particular reserve, say general reserve or securities premium reserve, is converted into share capital. But overall, shareholders' funds do not change. So therefore, there will be neither increase nor decrease in the ratio.
So please explain this point in detail, because one question was continuously asking this point: why bonus shares do not affect current ratio, debt equity ratio?
Okay.
Sumit was asking. Okay. Sumit Puri was asking again.
सुमित बेटा, आपका क्वेश्चन ठीक है कि why issue of bonus shares does not affect debt to equity ratio. अब आप सोचें, इक्विटी क्या है शेयर होल्डर्स फंड्स? शेयर कैपिटल प्लस रिजर्व्स एंड सरप्लस. और बोनस कहां से दिया जाता है? बोनस शेयर रिजर्व को कैपिटलाइज कर दिया जाता है, इधर जनरल रिजर्व और सिक्योरिटीज प्रीमियम रिजर्व और इवन सरप्लस, इसको यूज किया जाता है टू इशू बोनस शेयर्स. तो क्या हुआ? मेरे रिजर्व्स कम हो गए उस अमाउंट से, इस केस में 2.5 लाख से रिजर्व्स कम हो गए, पर मेरा शेयर कैपिटल बढ़ गया सेम अमाउंट से. तो ओवरऑल इक्विटी में कोई इफेक्ट ही नहीं आया. इफ जो मेरी इक्विटी पहले थी से 10 लाख और डेट था 20 लाख, तभी तो 2:1 बना. तो मेरा जो है इक्विटी, वो बोनस शेयर इशू करने के बाद भी वो 10 लाख पे है. पहले उसकी कंपोनेंट से था शेयर कैपिटल 5 लाख, 3 लाख आपका जनरल रिजर्व और 2 लाख आपका सरप्लस. और जनरल रिजर्व में से हमने 2.5 लाख रुपए का बोनस इशू कर दिया. तो अब जो मेरा शेयर कैपिटल है वो हो गई 7.5 लाख. सरप्लस वहीं का वहीं है 1 लाख, 8.5 हो गया. बट मेरा रिजर्व जो है वो जनरल रिजर्व वो कम हो गया. तो मेरा शेयर इक्विटी या शेयर होल्डर फंड्स वो उतने के उतने ही रहे. एक कंपोनेंट उसका बढ़ गया, दैट इज शेयर कैपिटल, दूसरा कंपोनेंट जनरल रिजर्व उसका कम हो गया. तो जब मेरा ओवरऑल अमाउंट में कोई चेंज नहीं आया तो रेशो में भी चेंज नहीं आएगा. तो चलें आगे. सुमित,
Sir, one person has said, can you please explain this again in English?
Hmm?
Can you please explain this again in English?
Okay, no problems. I can understand. There are students from South India too. So that is why I'm keeping it bilingual. You see, bonus shares are issued by capitalizing a reserve. We know formula for debt to equity ratio is debt upon equity. That is shareholders funds. And shareholder funds include share capital and reserves and surplus. Now, when shares have been issued as bonus shares, say by capitalizing general reserve, what happened? My share capital went up by say 2.5 lakhs, and general reserve came down by the same amount. So it means my equity or shareholder funds, they remain as they were before issuing the bonus shares. And issue of bonus shares do not impact liability debt. So the ratio will not change. Okay, let's take another question. Debt to equity ratio is 1:1. If dividend of rupees 50,000 is declared, the transaction will increase the ratio, decrease the ratio, neither increase or decrease the ratio, none of the above. Yes. No, dividend is declared out of surplus.
Most of the students have given answer A.
A. And that is the correct answer. Because declaration of dividend means balance in surplus, that is balance in statement of profit and loss, is reduced to that extent. And When their reserve is reduced, that means my equity also reduces. Because equity or shareholder funds is share capital plus reserves and surplus. So reserves and surplus has decreased. As a result, when the denominator increases, numerator remains same, the ratio will increase. So we can take an example. Debts are 2,50,000 and also equity is 2,50,000. 50,000 is paid. So equity comes down to 2 lakh rupees. So earlier it was 1:1. If we divide 2,50,000 by 2 lakhs, the ratio becomes 1.25:1. If debt equity ratio is 2:1, debt equity ratio is 2:1. If debentures of 1 lakh are redeemed, the transaction will increase the ratio, decrease the ratio, neither increase nor decrease the ratio, none of the above. Yes.
Only Moksh Babbar has given correct answer. C.
Answer will be C.
Moksh Babbar has given.
Moksh Babbar. That means nobody else has given the answer?
No.
No, that means it needs explanation, a deeper explanation. You see, whenever, if you remember in the beginning, we discussed current liabilities and non-current liabilities. Any liability which is payable within the period of 12 months or within the period of operating cycle from the date of balance sheet is a current liability. So that means in the balance sheet, last balance sheet, the amount of debentures that were redeemable during this year have already been reduced from the debt and shown as current liability. So when they are redeemed, debt or equity, both of them remain intact. They do not change. So, but you see, redemption of current liability or redemption of debentures will have impact on your current liability because current liability will reduce. We should not be looking at the items individually. We have to take a holistic view. What Schedule 3 says. According to Schedule 3, any liability which is payable within 12 months or within the period of operating cycle from the date of balance sheet is a current liability. And if current liability was to be redeemed, the debentures were to be redeemed, in the last balance sheet, they were transferred from non-current liability to current liability. So as a result, it will have no impact on debt to equity ratio.
So in the previous question before that, there are a lot of queries coming and dividend is declared, but not said it is paid. So why it is reducing the debt equity ratio? Here, people are asking.
Is dividend declared is transaction?
Transaction, they are asking.
Yes. Why? Dividend declaration. You see, maybe you have not reached that stage in the cash flow. It is normally discussed. Dividend, when declared, has to be paid within 30 days of its declaration. So declaration automatically means payment. If the question says that dividend was declared of 50,000, out of which 40,000 was paid, then your debt to equity ratio will still get impacted. Because what happened is, after declaration, see in this case 50,000 are transferred from surplus, that is balance in statement of profit and loss account, to dividend payable, which is a current liability because it has to be paid within 30 days. So that is the reason it will impact your debt to equity ratio. My shareholder funds will come down by 50,000, but my debt remains intact. I hope it is clear. So this we have discussed.
So once again, discuss this point because Swati is asking, debentures are long-term liabilities.
Yes, Swati, debentures, they are long-term liability. There's no two thoughts about it, but which any part of the debt, any part of the debentures which becomes payable within the next 12 months or within the period of operating cycle, it has to be transferred from long-term borrowings to current liabilities, current maturities of long-term debt. ये जब आपने पढ़ा होगा फाइनेंशियल स्टेटमेंट्स वाला चैप्टर, वहां पर आया होगा करंट मैच्योरिटीज ऑफ लॉन्ग टर्म डेट. तो ये it is that only. Say out of debentures of 10 lakh rupees, 2 lakh rupees worth of debentures are to be redeemed. So in the balance sheet, say 10 lakhs debentures as on 31st of March 2021, out of which 2 lakh worth of debentures are to be redeemed on 30th of June 2021. So when you draw the balance sheet of 31st March 2021, 8 lakhs will be shown as long-term borrowing, non-current liabilities, and 2 lakhs will be shown as current liability. So debentures are long-term, but any part of if thereof which has to be redeemed during the year, then it is transferred to current liabilities as current maturity of long-term debt. So as on 31st March 2021, debts have reduced, but my current liability has gone up. That is as on 31st March 2021. Now redemption has taken place on 30th of June 2021. So what happens on 30th of June 2021? My debt remains intact at 8 lakh rupees. And my equity, that also remains intact. And what is impacted on redemption is the current ratio, because 2 lakh rupees have been shown as current liabilities under current maturities of long-term debt, other current liabilities. I hope it is clear, Swati.
There is one more question from Prashant. If redemption of debentures made prior to maturity period, then in that case ratio might change. Can debentures be redeemed before maturity date?
Oh, you see what happens, Prashant. Debentures are always redeemed on the terms and conditions made at the time of issue of debentures. So if at the time of issue of debentures, there was a term that say 2 lakh worth of debentures will be redeemed in so-and-so on so-and-so date. So we know that as on that date, we have to redeem. So company should transfer that much amount from long-term debt to current liabilities. Right? So let us move ahead. Debt to equity ratio shows firm's long-term solvency position. This is the assertion, and which is correct. Debt means non-current liabilities and provisions. This is also correct. And correct explanation also. So option A is correct. Another assertion reason-based question. Issue of shares against cash decreases the debt to equity ratio and increases current ratio. Issue of shares against cash. Is the statement correct? Is the assertion correct? Yes. Issue of shares against cash means my equity has increased and debt remains intact, so the ratio will decrease. But my current ratio will increase because cash, I have received cash. Cash is my current asset. So current asset means the current ratio, current assets increase, but current liabilities remain intact. So it will increase. And reason is issue of shares means increase in equity, and thus debt to equity ratio will decrease. Of course, we have discussed current ratio will increase because current assets will increase. And out of the 4 options, A option is correct because reason is the correct explanation of the assertion. Total assets to debt ratio, total assets upon debt, that is long-term debts and long-term provisions. Pure, it is expressed in pure ratio, 1:1, 2:1. Again, calculated as on a particular date. Total asset means non-current assets plus current assets, both. It will be included. Debt, long-term debts and long-term provisions. Similarly, proprietary ratio, equity, that is shareholders' funds upon total assets. Again, expressed as a percentage. It is calculated as on a particular date. Equity, we have discussed many times. What is equity? Shareholders' funds. And total assets are non-current assets plus current assets. The purpose of determining this, calculating this ratio is to determine the investment of share of the equity in the total assets. And I mean assets, how the assets have been financed out of the equity and what part has been financed out of the borrowing. So interest coverage ratio, the formula is net profit before interest and tax. Before interest and tax. Because why before interest and tax? Interest and tax? Because the purpose is to determine whether the earning, whether the profit of the company is adequate to meet the interest on the long-term debt. And interest is always a charge. Net profit is determined after debiting interest to the profit and loss. So that is why it is net profit before interest and tax. Although not likely to come in the examination, but suppose you are given a statement of profit and loss, which has the net profit and includes interest on long-term borrowing, then you must add that much amount to the net profit to determine net profit before tax, before interest and tax. Ratio again is pure, calculated on a particular date. Net profit before interest and taxes, profit as per the statement of profit and loss before interest and tax. Interest on long-term debt, that is interest on long-term borrowing. Objective is, as we have discussed, to assess profit available to meet the interest cost. Activity ratios, because we are running short of time, we'll have to expedite because we have some questions to be answered, so we'll take them. Inventory turnover ratio, cost of revenue from operations upon average inventory. Again, expressed as a number of times. The purpose is to determine how many times the investment in inventory has been turned around to achieve the revenue from operations. Cost of revenue from operations is always better to be used, but in case in the question, cost of revenue from operation is not given, but revenue from operation is given, you can calculate the ratio by revenue from operations divided by average inventory. So average inventory is opening inventory plus closing inventory divided by 2. One question here. Opening inventory is 20,000, purchase is 1,60,000 and closing inventory is 60,000. If goods costing 16,000 are sold for 20,000, the inventory turnover ratio will be 5.25 times, 3.25 times, 4.25 times, and none of the above. The answer will be 4.25 times. How? Average inventory will be 20,000 plus 44,000, 60,000 minus 16,000. So divided by 2, 32,000 is the average inventory. And 1,36,000 is the cost of revenue from operations. That means 20,000 plus purchases 1,60,000 minus closing inventory 44,000. So the ratio comes to 4.25 times. Another question on this: opening inventory is 20,000, purchase is 1,60,000, and closing inventory is 60,000. If closing inventory increases by 20,000, the inventory turnover ratio will be 4 times, 3 times, 2 times, or 1 time. The answer would be 2 times. How? It is there before you. Cost of revenue from operations will be 20,000 plus 1,60,000 minus closing inventory 80,000. It comes to 1 lakh. And average inventory is 20,000 plus 80,000 divided by 2, 50,000. So inventory turnover ratio is 1 lakh divided by 50,000. That is 2 times. Trade receivables ratio, credit revenue, because receivable means goods have been sold on credit. And trade receivables are the amount receivable against the sale of goods or services. So credit revenue from operations upon average trade receivables. Credit revenue from operations will be credit sales minus sales return. Sometime in the question, you are given revenue from operation. Along with that, you are given cash revenue from operation. So that means if we deduct revenue from operations from, cash revenue from operations from revenue from operations, it will give us credit revenue from operations. And sometimes it is given number of times, but you are going to have MCQs. The calculations cannot be lengthy. So your calculations in the examination are going to be simple and straightforward. So average trade receivable is opening trade receivables plus closing trade receivables divided by 2. And trade receivables includes sundry debtors and bills receivable. This we have seen in one of the earlier illustrations also. Trade payable turnover ratio is opposite. That is credit purchases. Net credit purchases means, net means credit purchases minus returns and divided by average trade payables. Similarly, as we determine average trade receivables, we determine average trade payables also. That is opening trade payables plus closing trade payables divided by 2. And trade payables like trade receivables include sundry creditors plus bills payable. Working capital turnover ratio, revenue from operations upon working capital. Here also, if cost of revenue from operations is given, that should be used. But in the question, don't worry, only one of the terms will be used. So use that. And working capital, we have seen earlier what is working capital: current assets minus current liabilities. Coming to profitability ratios, gross profit ratio is formula is gross profit upon revenue from operations into 100. This is expressed as a percentage. So gross profit is revenue from operations minus cost of revenue from operations. Cost is what has been incurred to sell the goods. Direct cost, that is cost of purchases, cost of sales plus your direct expenses. And it can be calculated in 2 ways: purchase of stock plus inventory or change in inventory of finished goods plus direct expenses. Sometimes different values are given, so you may have to calculate it in a different manner. In that case, it can be purchase of stock, that is net, plus change in inventory of finished goods, opening inventory minus closing inventory, excluding loose tools, stores, and spares, because loose tools, stores, and spares, they are included in inventory. So if the question says that inventory includes loose tools, so deduct that to determine the cost of goods sold. Revenue from operation is always net sales, that is sales minus sales return. And net profit ratio is net profit after tax upon revenue from operations into 100. Again, it is expressed as a percentage. Net profit is revenue from operations plus non-operating incomes, that means other income, which we had discussed right in the beginning, minus cost of revenue from operations minus indirect expenses, indirect operating expenses, indirect expenses. So that gives us net profit. Cost of revenue from operations, as we have discussed in the previous slide, it will be discussed in the same manner. Indirect expenses are operating expenses plus non-operating expenses. And revenue from operation is net sales. Operating ratio, cost of revenue from operations plus operating expenses. What are the operating expenses? Which are incurred to carry on the operating activities. So those are operating expenses. So cost of revenue from operations plus operating expenses divided by revenue from operations, which is net sales, into 100, that is the percentage of operating ratio or operating cost. And this case, operating cost will be, you see in the first point, we have used operating expenses. In the second formula, we have used operating cost. Operating cost is a wider term than operating expenses, and it will include cost of revenue from operations and operating expenses. That put together will be the operating cost. This divided by revenue from operations into 100 is your percentage of operating ratio. So operating cost is cost of revenue from operations plus operating expenses, and cost of revenue from operations, we have discussed it many times earlier. So we will skip it. Operating profit ratio, the formula is given, operating profit divided by revenue from operations, that is net sales into 100. It is also expressed as a percentage. But if we are given the operating profit ratio, say 89% or 80%. So what will be the operating profit ratio? 100 minus 80. 20 will be my operating profit ratio. Because it is simple that operating cost, the revenue from operations, as reduced by operating expenses is the operating profit. So similarly, applying the same analogy, the operating ratio is deducted out of 100, it will give you operating profit ratio. And the last ratio is return on investment or return on investment or capital employed ratio. Formula is net profit before interest, tax, and dividend. Because interest is a charge, tax is on profit, and dividend is payable to the shareholders, divided by capital employed into 100 is the percentage of return on investment. Now, capital employed can be determined either following the liability side approach or the asset side approach. Capital employed calculated by either of the approaches will be same if, I'm repeating, if it is based on the balance sheet, because two sides of the balance sheet match. So therefore, capital employed should also match. But sometimes in the question paper, it is given from the following information, Now that is the information, that is not a complete balance sheet. So be careful of the word information. In that case, you have to make the best use of the information given to determine capital employed. Capital, as I said, employed can be determined by liability side approach or asset side approach. If we follow liability side approach, it is share capital plus, that is equity plus preference shares, plus reserves, plus long-term borrowing, minus. This is all liability side of the balance sheet. Now we're coming to the asset side, minus goodwill, minus non-trade investments, minus fictitious assets. This have to be deducted. And if we follow asset side approach, it is all assets excluding, that means deducting existing goodwill, non-trade investments, and fictitious assets, and also minusing, deducting debit balance in current accounts minus outside liabilities. But long-term borrowings or long-term provisions will not be deducted. Here we have seen that non-trade investments have to be deducted. Let me explain what trade and non-trade investments are. Trade investments are amount invested in another enterprise. Amount invested in another enterprise will help in generating operating revenues of the business. That means I have invested money in another enterprise, which will help me increase my business. मेरा business increase होगा उस investment से. So that is trade investment. And non-trade is that surplus amount is invested in another enterprise to earn dividend or interest. It is not for the purpose of trade or business. If in a question on return on investment or capital employed, if simply a term is used as investment, CBSE has guided, take that as trade investments. So, dear students, if the word used is term used is investment, treat it as a trade investment. But if specifically it is given non-trade investment, it is a non-trade investment. So let us take a simple example of calculating capital employed. You have a balance sheet before you. So let us prepare, followed by the liability side approach. We will determine how much is the capital employed. It is 7 lakhs plus 1,50,000 minus 50,000 minus 30,000. How? 7 lakh is the capital. I have taken the example of a firm, but take it as a share capital. Then general reserve, that is also part of the shareholders' funds. Goodwill minus will be deducted, and so will be deducted deferred revenue expenditure, fictitious asset. Right? So it is minus 30,000. The total comes to 7,70,000. If we determine from the asset side approach, it will also come to same 7,70,000. It is 10 lakhs minus 50,000 minus 30,000 minus 1 lakh minus 40,000 minus 10,000. How? 10 lakhs is my total asset. 50,000 is the goodwill. I'll deduct that. 30,000 is fictitious asset. And then on the liability side, current liabilities, 1 lakh, 40,000 and 10,000. So it is 7 lakh and 70,000. So with this, I will not take assertion reason-based questions further because MCQs, because a lot of questions have been answered. I'll skip these, but we'll take instead your queries. I will very quickly run through. You can have a look. Ravinder ji?
Yes.
Fine, sir. What are the questions? Let us, most of the questions we have answered it in between the presentation, but some queries had been received earlier, which we will take up and answer.
So the first question we have received through email is intra-firm analysis is also known as, that is MCQ question. There is question by Sumedha Arora. Intra-firm analysis is also known as time series analysis, debt analysis, cross-sectional analysis, and trend analysis. Look, Sumedha, its answer should be cross-sectional analysis, because intra-firm analysis is also called cross-sectional analysis, and that's it. That's fine. Okay. Now,
Second question also by Sumedha.
Second question is also by Sumedha. If operating ratio is 20%, sale of goods for rupees 20,000 will not change the ratio. Actually, that is assertion reason-based question. So assertion is if operating profit ratio is 20%, sale of goods for rupees 20,000 will not change the ratio. So in this case, assertion statement is correct. Revenue and reason statement is revenue from operation will increase by the sale value, and cost of revenue from operation will increase by the same amount of cost. As a result, the ratio will not change. So
the ratio will not change. If there was an amount given, then the operating profit amount will change. But here the assertion is about the percentage. So percentage will not change.
Another question is, I think name is not there. Again, Sumedha, okay. If gross profit ratio is 20%, sale of goods for rupees 50,000 will increase the ratio.
Again, it is a question of ratio. So if a ratio is not changing, so that means assertion is incorrect.
Incorrect. And reason statement is revenue from operation will increase and closing inventory will decrease by the percentage of gross profit. As a result, the ratio will not change.
So assertion is incorrect, but the reason is correct.
So its answer would be D. Assertion A is not correct, but the reason is correct. And one more question from Sumedha again. And actually, there's also assertion reason question. Trade payable turnover, assertion statement is trade payable turnover ratio shows whether the enterprise is availing the maximum credit period available to it. I think that is assertion statement is correct. High trade payable turnover ratios or short payment period is an indicator of not availing credit to the fullest. So the reason statement is also correct. So its answer will be assertion and reason are correct. And reason is the correct explanation of assertion. And there is one question. What will be the question is by Ritika Jindal. What will be the effect on current ratio if a bills payable is discharged on maturity? That means payment of bills payable, the effect of this transaction on accounting ratio, it will increase, it will decrease, either A or B, or can't say. And now the question, there is also additional question here, ratio is not given. So we have to take up the standard ratio, that is 2:1, 1:1, 1:2. All will give different answers.
You're absolutely right, Ritika. But such questions where the impact on the ratio is to be determined without giving the ratio should not come. Because in such questions, if say ratio is given 2:1, the best way and the easiest way and which will give you the correct answer is that imagine, suppose it is 2:1. The current ratio is 2:1. So take current ratio as say 20,000 and current assets as 20,000 and current liabilities as 10,000. Thereafter, you see the impact of payment of bills payable. That means my current liability will reduce and also my current asset will reduce by the same amount. So if their ratio is 2:1, so what will happen? My current ratio is likely to increase. Is that right? We'll just
Actually, you may take it this way. If numerator and denominator increase or decrease with the same amount, in that case, if the ratio is less than 1, the same effect. If there is decrease, that will decrease the ratio. If there is increase, then increase the ratio. And if the ratio is exact 1, there will be no change.
There will not change.
But if there is ratio is more than 1, then opposite effect. If numerator and denominator increase with the same amount, that will decline. Another question is from Vipul Singla. Actually, Mr. Vipul, you have given question in which assertion statement there is numerical question and reason statement its solution has been given. I don't think such kind of questions will be asked in the exams. What do you say, sir?
No, it is possible.
Is possible?
Because you see what a assertion, whether the assertion is correct or not correct, and whether the calculation, in this case, reason calculation is given.
But sir, in assertion statement will always be correct because that will be a question. There is not a statement, that is a question.
Yeah, but such questions is possible. Such question is possible.
So that require to be calculated.
Yes.
So we are not going to calculate right now. Another question is also related to Mr. Vipul. And I think the printing is not clear. So one question is complete.
Yeah,
this one. Question is, Asha and Nisha are partners sharing profits in the ratio of 2:1. Kashish was admitted for 1/4 share, of which 1/8 was gifted by Asha. The remaining was contributed by Nisha. Goodwill of the firm is valued at rupees 40,000. How much amount for goodwill will be credited to Nisha's capital account? That is a case of gift.
Gift. You see, whenever there is a gift, on the gifted portion, goodwill ka?
Yeah, goodwill.
On the gifted portion, no goodwill will be paid because gifts are always free from consideration. So whatever share has been sacrificed by Nisha, she will get goodwill for that amount.
So another question is from Mr. Vipul, because almost question he has given related to numerical and that requires calculation.
Vipul, I have received your mail and I will answer them to you tomorrow morning individually because this will require calculation.
And while webinar was going on, there are certain questions received from students. I'm reading one by one. One question is from Soumya Arghari. How to remember all the formulas, as there are numerous formulas? Actually, Soumya, what you have to do is learn these formulas, understanding their nature. First of all, classify 4 types of ratios: liquidity ratios, solvency ratios, operational efficiency ratios, actually activity or turnover ratios, and then profitability ratios. First, take one type of ratio and then understanding the nature of the ratio, you have to learn that. So that will be after taking the nature of all the ratios, that will be easy to memorize all the ratios.
And you see the ratio itself tells you total assets to working capital ratio or total assets to
debt ratio.
Debt ratio. So what are total assets? Asset side का आप total देख लेंगे. Fictitious asset हो उसको minus कर देंगे. Debt is always long term. You will see long term debt or long term provisions. जैसा question आया था, public deposits, term loans from bank, they are all long term. So accountancy is not about remembering or mugging up. It is about understanding. Or current ratio, current assets upon current liabilities. What is the purpose? Why do we calculate current ratio? That will give you the answer. Why do we calculate quick ratio? That will give you the answer. And accordingly, quick assets, you can determine what is debt to equity ratio. So these are all, if you see, what you have to understand is current asset, quick asset, current liability, debts, shareholder funds, revenue from operations, which is all part of your first chapter in analysis of financial statements. So understand them and apply them on the ratios.
Then there is one very important and very good question from Radhika. Sir, are loose tools, etc., also excluded while calculating working capital?
No. Good question, Radhika.
Good question.
Because we have to see the purpose. As I was just replying to the earlier query, we have to see the purpose, and accordingly we determine the components. Loose tools and spare parts, stores and spares, they are deducted from current assets to determine current ratio. Why? Because the purpose is to determine whether the enterprise will be able to meet its short-term financial obligations in time or not. And loose tools and stores and spares are not to be sold. So they are not part of the current assets. Now coming to working capital. Loose tools and stores and spares, they are essential part of the working capital. Because without loose tools, maybe the production cannot be carried out. What are loose tools? We must understand. Say we have to manufacture a bottle. To manufacture this bottle, we'll make a die. That is loose tool. So it is not meant to be sold, but certainly they are required as a working capital. Similarly, stores and spares, they are the essential part of the machinery, vital parts of the machinery. So they are maintained so that production is not stopped. So in the working capital, we will not deduct it. But while calculating current ratio, we will.
There is one question from again Sumedha. Sir, what will the effect of conversion of debentures into shares on debt equity ratio?
Conversion of
debentures into shares.
Sumedha, we discussed it at length. I think we explained it 2-3 times. We should not be looking at the debt in isolation. Whichever liability becomes due within 12 months or within the period of operating cycle, on the last balance sheet date, that much amount should be transferred from long-term borrowings to current liabilities under current maturities of long-term debt. So on the date of conversion, it is not a part of debt, but it is a part of current liability. So if they are redeemed or converted into shares, shares. Now what happens? My share capital increases, but my debt remains same. As a result, my debt equity ratio will come down because share capital increases, that is shareholders funds increases, but my debt does not change.
There are actually 2 questions from Santoshini. Sir, which ratio in current ratio can be considered as high, very, and low with respect to ideal ratios for current ratio? And same question is for debt equity ratio. Is that ideal level is 2:1? If the ratio is high, low, or that is at ideal level?
The question is
what will the current ratio? What is the meaning of current ratio, high current ratio, and low current ratio, and ideal current ratio?
You see, we consider at this level, at your 12th class level, that ideal current ratio is 2:1. Although there is no fixed criteria, but at this level for education purposes, we consider it as 2:1. That means if current assets are twice the current liabilities, the enterprise will be able to meet its short-term financial obligations. Now, If the ratio, say, becomes 4:1, now what happened? My current assets are not being effectively utilized. That means my investment in current assets is not prudent. It could have earned income, but I am keeping it as idle assets. But if the ratio is, say, 1:1, that means I may not be able to meet my short-term financial obligations in time.
I want to add one more thing, Santoshini. Whenever the amount is invested in a business, sufficient amount should be invested, not more, not less. So that means that is a part of investment decision, that how much part is to be invested in long-term assets and how much amount is to be invested in short-term investment. Sufficient amount should be invested so that normal working should not affect. And extra amount is also not to be invested because that will not give you return. So sufficient amount is to be invested. So from current ratio point of view, ideal level is considered to be 2:1 because lower the ratio, that will impact payment ability to short-term liabilities, but too high current ratio will indicate that short-term funds are not being efficiently utilized.
They are lying idle.
And one question is from Rahul Agrawal. Sir, please explain what are bonus shares? I think we have already discussed that.
We have explained it. Bonus shares is nothing but capitalizing the reserves. For bonus shares, company does not receive any amount. But the reserves, say general reserves, surplus, that is balance in statement of profit and loss, or securities premium reserve, they can be utilized to issue bonus shares, but the company does not receive any amount. Only thing is that under shareholder funds, balance in share capital will increase and balance in one of the reserves will decrease by the same amount.
Yes. And I just taking last question. Actually, that is not a question. That is from Kirti Verma. Where can we get updates regarding more such webinars of yourself?
You can subscribe to my Instagram. That is the name of CAGS Grewal. You can subscribe to that. We post it there. Or you can simply send your details, your email ID, your phone number, so that we can, our team can send you the intimation.
So can we take one more question? That is very important.
Mhm.
This question is from Pratna Arora. And the question is, provision for employee benefit is supposed to be shown in short-term provisions or long-term provisions? Because she's Pratna, because she's saying in some of the books it has been taken as short-term, and in the other books it has been taken as long-term.
You see, provision for employee benefits. What are employee benefits? First of all, we have to understand this. Employee benefits are gratuity, which is payable on retirement, or earned leave, again payable on retirement. So when amount is payable as gratuity on retirement or earned leave, I'm not talking about provident fund, because provident fund is deposited with the government agency every month. So company is not liable. It has already met the liability on account of provident fund or employee state insurance. It is only the gratuity or earned leave encashment, and in some companies, medical benefits. So what the company does, that it makes the estimates that after the retirement, which may be after 20 years or maybe after 30 years, 10 years, it will be payable. So when the amount is payable after 10 years, 20 years, or 30 years, it falls under long-term provision. Remember, non-current liabilities are those liabilities which are not current liabilities. But yes, say few of the employees, they are retiring next year. So they will be amount payable to them will be current provision,
Short-term
but
provision.
short-term provision. But at this level, if it is given as provision for employee benefits, treat it as long-term provisions, because it is not relating to one particular employee, but the group of employees. And if the information is given that out of 100 employees, 10 are retiring next year, and provision relating to them is, say, 2 lakh rupees, then 2 lakhs will be transferred to short-term provision, and balance will remain in long-term provision. And that is the reason, because the company will know only the final amount at the time of their retirement. जब वो retire होंगे, उस समय वो amount determine होगा कितना amount उनको pay करना है. तो पर provision तो हमने पहले कर ली, and rightly done under the prudence concept of accounting, कि मेरी liability आनी है, तो वो इसीलिए उसको provision कहा जाता है. So if nothing is mentioned in the question, take it as long term. If the information is given, then accordingly you decide whether it is long term or short term.
So almost we have taken all the questions, लेकिन अभी भी कोई queries हैं तो शायद वो solve नहीं हो पाई. तो you may mail your queries at cagsgrewal@gmail.com. तो आपको queries का answer जो है वो मिल जाएगा. So anything else you want to say?
Well, thank you, and do join us day after tomorrow at 5 p.m. because we are going to take very, very important questions for discussions. We have already received few. कि कैसे time manage किया जाए in the examination, OMR sheets में कैसे answer किया जाए, तो उन सब चीजों को हम डिटेल में डिस्कस करेंगे. And even if you have questions, still you can send it to us. We are going to discuss them out on day after tomorrow, and link will be sent as it has been sent in the past. So there are going to be 4 people who will be answering your queries. Gaurav, Mr. Gaurav Palia, Mr. Harvinder, I will be there, and also Mr. R.K. Khosla will be there. So take advantage of all of us. Whatever query you have in your mind, don't hesitate to send it. And if you send it to us in advance on cagsgrewal@gmail.com, it will give us more time to think it more deeply. Like we had a seminar yesterday, and good 30 minutes was spent on discussion of OMR sheets. There were so many different views coming. So we have all jotted them down and to explain it to you so that you do not commit any mistakes in answering your questions on the OMR sheet. So thank you for joining us, and all the
Thank you,
best.
children.
See you day after tomorrow, 5 p.m. and link will be shared with you. Thank you.
Okay, bye children.
And bye Gaurav too.